Good evening, ladies and gentlemen, and welcome to the Brokers and Analysts Conference of Invicta Diagnostic Limited, IDL, to discuss the upcoming SME IPO. Let us begin with the introductions. We have with us today Mr. Ketan Jain, Promoter and Non-Executive Director, Mr. Sanket Jain, Promoter, Chairman and Non-Executive Director, and Mr. Rohit Srivastava, Promoter and Chief Financial Officer. Socrates Capital Private Limited are the book running lead manager for the issue, and Mr. Amit Pathak, manager at Socrates Capital Private Limited, is also present with us on this call. At this moment, all participants are in the listen only mode. Later, we will conduct a question and answer session. At that time, you may click on the Q&A tab to ask a live question. Please note that this conference is being recorded. Founded in 2021, Invicta Diagnostic Limited, or IDL, is engaged in the business of offering radiology and pathology solutions in the Mumbai metropolitan region. The company offers pathology and radiology testing services such as imaging, pathology, clinical laboratory, and teleradiology under its brand name PC Diagnostics. Through its operational network, which consists of 7 diagnostic centers and 1 centralized laboratory across MMR. The company offers a range of approximately 60 routine and 487 specialized pathology tests and approximately 96 basic and 130 advanced radiology tests that cover a range of specialties and disciplines, including pathology tests ranging from basic biochemistry and clinical pathology to cytogenesis and high-end molecular diagnostic tests, and radiology tests ranging from basic echocardiograms, X-rays, and ultrasounds to advanced radiology tests including CT scans, MRI, and PET-CT. Invicta Diagnostic Limited is now looking at raising funds through the IPO route for funding capital expenditure for purchase of medical equipment towards establishment of 5 new diagnostic centers in Maharashtra and for general corporate purpose. The IPO will comprise a fresh issue of 33 lakh 8,800 equity shares with a face value of rupees 10 through the book building route. The issue will open on Monday, December 1st, 2025. The anchor portion will open on Friday, November 28th, 2025, and the issue will conclude on Wednesday, December 3rd, 2025. The company will be listed on the NSE Emerge platform. The price band for the issue has been fixed at rupees 80 to 85 per share. I would now like to request Mr. Rohit Srivastava, Promoter and Chief Financial Officer, to give his opening remarks. Over to you, sir.
Thank you. Thank you for the introduction. My name is Rohit Srivastava. I'm the Chief Financial Officer. I'm joined on this dais with Mr. Ketan Jain and Dr. Sanket Jain, both consultant radiologists with our company and also the directors of the company. So there are quite a decent brief has already been given in the introduction. So let me just directly jump into it and introduce my company to all the viewers. So Invicta Diagnostics, we are a diagnostic company which is based primarily in MMR, Mumbai metropolitan region. The reason I say MMR and not Mumbai is because we have got our centers in Thane as well as Mira Bhayandar. We currently have a chain of 7 diagnostic centers from South Bombay in Baikala to the western suburbs, that is in Andheri East, Thane, and Mira Bhayandar. Invicta Diagnostic is prima facie a radiology-based company with focus on advanced and routine diagnostic tests. Pathology is also part of our offerings, but that constitutes only a 10% of our overall business. With regards to radiology, at any given centers, we offer the entire gamut, right from sonography, X-ray, 2D echoes, color Dopplers to CT, MRI, as well as PET-CT. PET-CT as a modality is available prima facie only in our flagship center, which is based in Thane. Our diagnostics are structured in a hub and spoke model. So basically, what happens is our high-end radiology, which is with CT and MRI, those are the centers that we call hubs, where we offer the entire gamut: ultrasound, X-ray, patho, CT, MRI. They are called our hubs. The spokes are our centers, which are usually placed within 2 to 3 kilometer radius of a hub, and they offer the basic radiology and pathology, such as um, sonography, X-ray, 2D echoes, color Dopplers uh, at the respective centers. So basically, our spoke centers develop as not only a profit center in themselves, but they also refer our to our hubs, the CT and MRI tests which are required by patients. So that is how we look to form a network where our hubs not only service the surrounding areas, but our spoke also provides patients to these centers. Our company was incorporated in 2021 as an LLP before we converted it. And at that point of time, we had the promoter group had another set of centers which were operated from different LLPs. So we decided in 2023 to financially 23-24 to restructure it into an entire single entity, wherein we have brought all of these centers into a single under a single unit, which is Invicta Diagnostic. And under that, we have got subsidiaries which in some which we hold 99%, some which we hold lesser. We also are looking to expand our presence in centers as well as overall financially through acquisitions. So that's why we had actually acquired a hub center, which is in our base in Mira Road, Pratham CT and MRI center, which was there in Mira Bhayandar. So we had acquired it. We have taken a 75% stake in that company, and the balance is held by the radiologist from whom we acquired. With regards to our other subsidiaries which are there, we hold 99% in our Baikala Center, which is through the Primacare Healthcare LLP, and we hold again 99% in the Marol Center, which is PCD Diagnostic LLP. There is another subsidiary that we have, which is a center that we have set up, the Spock Center, which is there in the vicinity of Thane, which is Kalwa, in which we hold 60% stake. Our company has been offering the entire gamut, even though our contribution of pathology is only 10% of our overall business. We do offer, we have a centralized lab wherein all the samples are processed. Any blood samples which are taken in any of our centers are sent to the centralized laboratory for the testing. In-house, we do all routine and specialized testing, such as CBC, CBC, ESR, etc. come under routine testing. Specialized testing, we've got thyroid, HbA1c, which is for the blood sugar that is taken. We do that in-house. For super specialized testing and microbiology, we outsource the testing to reference laboratories such as Metropolis, SRL, Newburgh, etc. With regards to the advanced radiology tests, of course, we do all of that in-house only. There is no reference as such which we outsource to any other center. Our PET CT, like informed earlier, we have it only in one of our centers. So if any PET CT cases come to any of our other hubs or spokes, we refer that to a Thane center. A little bit about the machinery that we operate. So MRI, which is one of the more expensive modalities that we have, one of the most expensive rather, we usually have 1.5 Tesla MRIs. So basically, MRI basically operate on the principle of magnets. So the Tesla is the strength of uh, the magnetic field which is being generated. So 1.5 Tesla is the gold standard for MRIs. We operate usually all our machines are 1.5 Tesla. One of the ways that we have managed to keep our cost and when we cover in the future our return on equity high is that we do not go for new machines, we buy refurbished machines. What this basically does is that it allows us to keep the cost of the acquisition of the machinery in reasonable. I will still not say it is cheap. Just to put things in perspective, MRI machine which is there cost a refurb machine costs anywhere between 3.2 to 4 crores, whereas a new machine would cost anywhere between 6 to 9 crores. So it's almost 50%. With regards to the ultrasound CT, the costing is not that big a factor, so we do have a mix of refurb as well as new ones. With regards to the PET CT scan, which is one of the most expensive and most challenging modalities that is there to install, it is basically done for cancer testing, for marking of tumors and understanding if there is any cancerous growth in a patient's body. It involves basically injecting radioactive isotope into the body, which the machine is able to pick up. In a PET CT scan, you can do both the PET as well as CT scan at the same time. This is the hub and spoke model explained graphically what I just explained. Whenever our customers walk in, they'll either come to our flagship center, which is in Thane, any of our hubs, or the spoke centers which are there. For any test, any radiology test which needs to be done is done at those respective centers. Any CT or MRI or advanced PET CT that needs to be recommended, the spoke centers and our hubs will divert to our flagship center. Any samples which are collected, blood samples for reporting, they are sent to the centralized laboratory. It is at the centralized laboratory where we take a decision as to which test will be done in-house and which will be done through our outsourced partner. But as far as the patient is concerned, all reports are coming from PC Diagnostic itself. Uh, Through the entire process of sample collection and taking, the cold chain is maintained so that the samples are not coagulated or there is any mix-up that happens. This is done through a mix of technology and training, staff training. A geographical representation of where our centers are. Like I said, we cover at this point of time, our presence is prima facie in MMR. In South Bombay, we have Baikala, which is our hub center. In Parel and Shivri, we have our spoke centers. In Marol, we have another hub center. In Thane, we have our flagship center, which has also got the PET CT. Kalwa is another spoke center, which is in close vicinity to Thane. And in Mira Bhayandar, we have our another spoke center, Pratham, which we had taken via acquisition. On the left side of the slide, we can see the centers which are operated through subsidiaries. So the Marol Center is operated through the PC Diagnostics LLP. The Kalwa one is operated through the Invicta Medical LLP. Baikala is operated from Primacare Healthcare LLP, and Pratham is operated from Pratham City and MRI Center. That where we hold a 75% stake. In Marol as well as Baikla, we hold 99% stakes. In Kalwa, we hold 60, and in Mira Bhayandar, we hold 75. This is again the details of our subsidiaries, which we've already covered. Talking about the management, let me just hand over the mic to my directors. They can introduce themselves to our viewers. Dr. Ketan Jain, if you'd like to go first. Ketan, you're on mute.
Dr. Ketan, may we request you to please unmute your mic and go ahead? Dr. Ketan, you are not audible at the moment.
Hi, am I audible?
Yes, you are audible.
I Something went wrong. I don't know whether I was disconnected or something was wrong. So sorry, I missed. Ketan, Sanket, have you finished the introductions?
Yeah, should I go ahead?
Yeah, Sanket, please go ahead.
Can you hear me?
Yes, you're audible.
Yeah. Hi, Dr. Sanket Jain. I'm a radiologist. I have been associated with Invicta Diagnostic since last 7 years. and I'm working as a radiologist, as a chairman and non-executive director with Invicta Diagnostic, and I look after all the technical reporting of the CT and MRI and any patient related any issues or any queries, and I'm direct contact with the physicians for the reporting, and mainly I look after the technical things.
Thank you, Sanket. Uh, the rest of our
I'm audible now.
management team, yeah, Ketan, you're audible.
So, hi guys, I'm Dr. Ketan. I've been working as a radiologist from last 17 years, and last 7 years we have founded this company, and we have been working together. So, I do work as a sonologist in all our centers, couple of centers. Apart from that, I mainly look at setting of standard SOP protocols for functioning of the center, and also do compliances for the machines which are required by the all the necessary permissions related to the machines and technicals. Thanks.
Thank you, Ketan. The rest of the management team include me. There's Dr. Deepika Jain, who looks after the human resource piece. We have got Dr. Kushal Kohli. He's another consultant radiologist who's looks after PET CT and other reporting. Also, he's one of our senior radiologists with us. Dr. Konika Srivastav looks after the operations, and we've got Ms. Sonia Mahajan, who is part of the compliance. Look to spend some time over here. The entire fundraising that we are doing is for expansion purpose. The entire funds that we are raising are entirely for acquisition of machinery and expansion. At this point of time, the funds that we are looking to raise, we're looking to expand centers. We are looking to set up 5 more hub centers with CT and MRI, and that is what the funds are being utilized for. We are looking to expand within Maharashtra only, not just MMR, and we'll be looking to go beyond Mumbai MMR into tier 2 and tier 3 cities also. The goal is that we will be setting up entire hub centers with CT, MRI, sonography, X-ray services. With regards to our existing centers also, we are looking to deepen our footprint in our core market by increasing the capacity. Now, let me just talk about a little bit on the capacity utilization that is there. So basically, whenever we set up a center, a CT and MRI center, especially with regards to MRI, there's always a capping on the capacity on the number of scans that can be done on a daily basis. Uh, an efficient or rather a full capacity that we have for an MRI in 14 hours is we can do anywhere between 25 to 30 scans. So on an average, per scan takes around 30 minutes with regards to MRI, which if any of you have ever needed an MRI scan would know the know this fact. So basically, by upgrading some of our machines, we are looking where we are operating at a higher capacity utilization. We are looking to increase that capacity from a 25 to a 30 or a 30 to a 35, so that we have got more excess capacity. The number of the turnaround or the reporting time or the rather scan time which is there, which is on an average 30 minutes, can be brought down to 25 or 20 minutes per scan. In addition to that, we are also looking at acquisitions for, in addition to our organic growth. For this, we had raised a pre-IPO round of 6 crores also. This money has been entirely set aside for acquisitions. We are looking to acquire hub centers within for these acquisitions, which are mature and profitable, which will give us immediate addition to a top line as well as bottom line. With regards to the same, we are also looking to further increase our outreach in our existing and new markets through branding and marketing activities to get more patients and be able to capture a larger share of, shall we say, the more well-paid patients. Usually, in the life cycle of a center, when we set up a hub center, what usually happens is that in the start, to get the footfall growing, we actually reach out and do a lot of marketing activities. We tie up with um, we do marketing activities with the local buildings, the societies which are there. We hold camps over there. We tie up with the local corporators for their outreach and help for conducting camps. In addition to that, we reach out to the government hospitals which are nearby. When I say reach out, we do not do tie up with the hospital or anything, but there is a huge oversupply of patients over there, wherein the wait time for an MRI is quite large, and we ask the patients to be referred over here, where we can do it at cheaper. I mean, a little cheaper, a little more expensive than the local government rates, but so that the scans can be done and the treatment can be started. This is how we usually look to get the patients going. And as we move, as the life cycle progresses, we look to reduce the number of discounted patients that we do, and we start concentrating on more on the fully paid patient. As we progress further in this presentation, this point will be highlighted in a better manner. Talking a little bit about the diagnostic industry, and particularly for Maharashtra, because we are going to be a Maharashtra-based player for the near future. The industry is actually growing in double digits, 12% CAGR for the overall diagnostic industry. In radiology, is it slightly higher at 13%. As when an industry is going at double-digit rate, you can we will obviously be looking to outperform this growth rate by a huge extent. Very simply put, at this point of time, not only is the radiology part of industry is not only just growing, but is also highly fragmented. So that's why there are a lot of opportunities that gives us for mergers and acquisitions. In fact, if I were to put it, radiology at this point of time, radiology industries at this point of time, where pathology was maybe 5 years ago, 5 to 6, where when we saw a lot of merger and acquisition activities happening, that is where I see radiology is today. With regards to the same, if I were to talk about the fragmented nature of this, almost 50% of the industry, more than 50% rather, is fragmented, with very few large uh, chains or local chains which are available. So it brings into contrast the fact that what we can supply, or whether what we can give to our patients, the competitiveness of not just the prices, but the consistency of reports and consistency of reporting, irrespective of the challenges, whether the radiologist is traveling or not, because we have those processes set with us. The key risk, any business has got risks associated with them. And for us, the major risk is our equipment that we use. Uh, our machines which are there, they're all imported, and any problem that we face with them, any issue with regards to their uptime would be a significant risk to us. However, with regards to the same, we ensure that any machine, even though we are purchasing refurbished, have a minimum a life cycle of minimum 10 to 12 years. And not only that, these machines are always covered by comprehensive maintenance contract. So if the machine ever faces a critical issue with regards to the uptime, they are solved within a day or so. So we do not face many downtime kind of scenarios. Further, besides this risk, there are obviously other business risks with regards to the concentration of the revenue that is there, prima facie from MMR. But frankly, we have made it work for ourselves. In fact, the concentration is there, is not really impacted by, doesn't really impact us because we rely on a lot of our research. So basically, unlike pathology, like I mentioned earlier, radiology is a very location specific market. So unlike pathology, where you can set up a center, a very large center in a particular part of the city and look to serve the whole city from there and set up a logistic chain, you can't do that with radiology. Radiology will always, at maximum, serve 4 to 5 kilometers in a densely populated city like Maharashtra. In smaller towns, you might have the whole district being served by that particular center, but I'm talking with respect to MMR. So that is your geographical location is becomes very important. So that's why there's a lot of research that goes into us selecting of any premise where we will be picking it from. And further, the locations that we pick up, the real estate that we pick up, it needs to have high visibility and high footfall so that we are able to generate a lot of walk-in clients for various tests just because of the convenience of its location. Coming down to our operational indicators, the financials, we have been growing in a very healthy manner. Uh, with regards to FY24, the figures look very skewed. Let me first address the first graph which is there with the number of diagnostic centers. In FY24, we did have 8 centers, and we shut one of them down. but that center, while it looks it shows a huge drop, it did not really impact us because it was a very simple collection center. It was a spoke center of our Baikala unit. It was a simple collection center spread over something like 70 to 80 square feet of place. We had taken it prima facie for branding and outreach to a particular area of Mazgaon, which is close vicinity to Baikala, where our center is. And we, rather than just buying a hoarding, we thought that let us make it a collection center. And the reason we closed it was because the property went to under redevelopment, not because of any other reason. Since it was only a collection center, we had not really looked to get into lock in a long-term agreement for that particular place. Since then, we have got 7 centers. We have one center also, which is non-operational at the moment. It is being set up and will be operational in the next 15 to 20 days, which is a PET CT center, another PET CT, which we are installing in Parel, Mumbai. With regards to the number of patients served, again, I will skip FY24 because that was a year of consolidation for us. There were a lot of, our entire structuring that was happening, it happened by November, December 23, 24. So that's why the figures look very skewed. But FY25 was the full year of operation that we had, and we have served over a lakh patients. And we continue the trend with the 6 months in FY25 26 that we are now we have done 50,000 plus patients in this 6 months. With regards to number of tests performed, again we are on track with about 176,000 tests being performed in FY25 and 87,000 we have done in this 6 months. The number of tests per patient in FY25 and FY26 remains the same at 1.7. With regards to, before I address the rest of the figures, I would like to address the last graph, which is the average revenue per test. So in last financial year, we did a top line of 30 crores. In the 6 months that have gone, we have almost done a top line of 17 crores. Uh, if you see the number of tests, number of patients, there has not been any incremental, a very large incremental or even a 10% incremental to justify this increase. And that comes from the average revenue per test that we are generating. If you see over FY25, again, 24 for the, you know, I am repeating myself, but FY24, the figures are, uh, you know, they're kind of skewed because of the mergers, the entire structuring that happened. But in FY25, it was 1700, which we have taken up to 1940. So this entire increment, which has come in because of the fact that we are operating our centers at higher capacity utilizations, and we are giving more focus to fully paid patients rather than discounted ones. It is because of that. Our institutional business is not a very high percentage. FY25, we had a total 93% business, 13% business, which was from institutions. So when I say institutional business, basically we have tie-up with hospitals, which are smaller hospitals, nursing homes, 50 to 100 bedded hospitals, which do not have CPR facilities, and we tie up with them for them to send their patients to us. And of course, we do health checkups for certain corporates which are based in that particular uh, location. So while this figure looks very high, much higher at 17% for FY25, 26, uh, it is prima facie because of the fact that a lot of corporates do get their tests done in the first half of the year. We expect it to average out to again 13% for next financial year, or rather by the second half. Uh, we do not have any government business. We have stayed far away from it. That's why almost 90% of our business is coming from directly from the B2C, wherein patients walk into our centers and perform. The overall headline figures on a consolidated basis, our revenue from operations, as mentioned, for FY25 was 30 crores. This 6 months, we have done 17 crores of top line. In FY25, our EBITDA was over 9 crores. EBITDA at this point of time is in excess of 6.5 crores. If you see the margins, EBITDA margins have been healthy. We had approximately 33% margin in last financial year, and this financial year we are getting at a higher 39%. Again, this is mainly attributed to the fact that as in radiology, we are a very high gross margin business. Which is true with any capital intensive business, the gross margins are very high. So once we start hitting operational break even, uh, any additional revenue that we do, like if we do a revenue of 1 lakh rupees after that, almost 75% of that gets added to our EBITDA margins. Our PAT is also very healthy. Last year, we closed at approximately 5 crores of PAT. This year, we have done almost a PAT of 4 crores. Return on equity figures last financial year was 44%. This year, it's showing 22, but on an annualized basis, it would be around the same. With regards to investment in our equipment, you can see a spike of investments which has happened of 7.3 crores. This is prima facie because of the PET-CT machine that I mentioned that we are bringing in over there, and we have upgraded some of our machines which are there, the CT and MRI, the MRI machines particularly, so that we can make the scan times faster, and that gives us some more excess capacity wherein we can do more number of patients in the same time slot. Uh, with regards to business model, we have pretty much covered this. Just a figure on the bar graph on the right-hand side shows the main modalities that we employ. So basically, in our Thane center, or rather the hubs, we have got three main equipments that come, which is the CT, MRI, and sonography. In our Spock centers, only the sonography machine is the main equipment that is there. IPO opportunities, well, uh, again, we are coming out with an IPO of 28 crores at a price band of 80 to 85 lakhs. Sorry, I beg your pardon, 80 to 85 rupees. The IPO is opening on 1st December, will be closing on 3rd, and the post-issue shareholding promoters will be having 66, almost 67% shareholding. Our lead manager is Dr. Demis Capital. Uh, with regards to investment thesis, I would just like to point out that while we are there in MMR, we are looking to expand beyond that. The radiology focus of us gives us higher revenue, beg your pardon, higher margin business, where and compared to pathology, there are more entry barriers, especially because of the high capital intensive nature, which acts as a barrier for too many people to come in. On top of that, we have a dedicated team of radiologists who are there with regards to reporting, both for on-site radiology as well as teleradiology. Teleradiology is basically CT and MRI, is used for CT and MRI, which can be reported from anywhere, irrespective of where the scan is done. And the the background of our promoters, both Ketan and Sanket, they both are radiologists. Even the other people on our team and shareholders, including Dr. Kushal Kohli, he's a radiologist and a shareholder in our company. And of course, Dr. Amol Khandelwal, who is also a shareholder and a very senior radiologist. These factors give us a more stronger background in radiology, and we feel that we have cracked the code on how to grow as a radiology chain. I will not go through the entire financial statement, make the entire is very cumbersome. Let me uh, open this uh, presentation to the Q&A. I'm sure we've got viewers who would be keen to ask a lot of questions. So let's look to address them.
Thank you very much. We will now begin the question and answer session. To ask a question, please click on the Q&A tab on the panel and click on the raise hand button. The operator will announce your name when it is your turn to ask the question. Please accept the prompt on your screen and unmute your microphone while proceeding with your question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Once again, ladies and gentlemen, to ask a question, you may click on the Q&A tab on the panel and then click the raise hand button to ask a question.
So I think there someone has given a question. Rahul has asked basically that 90% of the business from radiology and 10% of pathology, will this mix change in the near future? And how will our margins perform? So, like I said, at this point of time, we are focused on radiology. While we would be very keen to, for pathology to form a higher percentage of our turnover, but it, given our focus and the expansion of hub centers, which are prima facie um, uh, radiology-based setups, we do not see this mix changing too drastically. We expect that pathology in the past would be somewhere around 10% of our turnover because we are not actively marketing pathology. Usually, it is the patients who walk in for sonography or other tests which carry with them, they have pathology tests. So we tend to address those.
Participants, if you wish to ask a question, you may click on the Q&A tab and click on the raise hand button. We
I
have a
think there is.
question from, yes. So we have a question from Rahil S. from Sapphire Capital. Please go ahead.
Hi, sir. Good afternoon. Can you hear me?
Yes, you're audible.
Yes, yes. Hi. So, first of all, about the expansion, if you could, shed a light on how many centers do you see forming, in the coming 2 to 3 years? So, what kind of scale does PC Diagnostics look at achieving? And then you highlighted one of the other key areas which will focus is on branding and marketing. So let's say once you accomplish this IPO, what sort of marketing or branding expense as a part of revenue you will be look to spending?
Let me answer that first. I think one of the major parts is how we look to expand from the public funds that we are raising. We look to expand to five hub centers. That is our first goal, right? So that will be adding. There is already one center which is going to be operational in the next couple of weeks. So that's another. And we have already raised a pre-IPO fund that I mentioned where we're looking for acquisitions. So basis this, uh, you know, 5 + 1 6, and we see at least 7 to 8 centers coming up just out of this entire funding activity that we have undertaken. Plus, while I wouldn't want to get into too much of future projections because I don't want to be on the wrong side of the guidelines. But we generate ample cash flows with a EBITDA margin which we are maintaining even at this point of time. The cash flow, our EBITDA margin entirely can translate into cash flow because we are almost debt free, right? Except for the tax component which is there. So we will have that cash flow also for our further expansions. So yes, we are looking at a very aggressive growth for the near future. And just to put things in perspective, the top line that we're totally delivering right now, approximately well, 30 crores last year. the overall capital expenditure that we have undertaken for that is 25 crores right from the start till date. So we are usually in diagnostic, what you can expect is that the I mean investment to or rather capital to turnover ratio would be between 1.25 to 1.5 times approximately for a mature center. If any hub center that we look to put in, the cost is usually between 5.25 to 6 crores, depending on multitude of factors such as what is the rental, what is the deposit, what kind of property we are getting, and what are the amount of interior costing that would come. But that is usually the fat math. That's how it works out. So let's assume that around 5.5 crores on an average is what the turnover, I mean, the capital investment is. So you can expect that, on a mature center basis, we'll be getting around 7 odd crores of top line from them, between 6 to 7 crores, yeah, from mature.
So as of
As
now,
we speak.
you had mentioned, sorry, you were saying something?
No, I was addressing the second part, but please go ahead.
No, no, please finish. I thought you were finished.
With regards to advertising and marketing, again, these are all very location specific because for our feeders, it's a 5 kilometer radius, right? So it will be along the same lines that we will be, as so far we have just advertised with regards to, shall we say, feet on the street with our marketing staff. But as the centers, number of centers, the geographical expanse increases, we'll be looking at other more avenues because like print media or online media because of the fact that we'll have a much more geographical expanse which the advertising will be able to serve.
Okay. So with regards to the current chain of 7 diagnostic centers you have, how many would you say are mature?
All of except so I'll go specific wise. Out of these four, out of the four hub centers, we have three which are in uh, mature centers. One of them, the one center which is there. When I say mature, they are operating at 75 to 80% capacity plus utilization. So if I were to get even more specific, my Thane center, and I'm talking about pre-expense that I've done by for increasing their capacity. So Thane is operating at around 80% capacity utilization. So is Baikla operating at 80 to 85% capacity utilization. And with regards to Pratham, the Mira Road, so Mira Bandhan Center, it is operating at close to 75% capacity utilization. With regards to my Marul Center, which is operating at lower, since it is compared to the other, it is newer, it is operating at approximately 65% capacity utilization. So headroom is still there for us to increase, get additional turnover from my existing centers, but the majority of the growth will be coming from the new centers that we are putting up. And of course,
Okay,
the
so you're
acquisition.
saying okay, so you're saying these 3 centers plus the other ones which are at low utilization, the so mainly for the three which are at like optimal utilization, you can say 75 to 80% is optimal in this case.
Yes, yes.
So the revenue from there is at its peak, one can say.
Like I said, we've just expended some amount where we're looking to increase the. We have looked to upgrade some parts of the machinery, which will allow us to bring our scan time down lower, so that in itself creates capacity. So instead of when I don't have to do when a scan instead of taking 30 minutes is going to get finished in 20 to 25 minutes, I'm adding around 10 to 15% and additional capacity. So we'll be able to do more patients. But yes, they are still going to be counted as mature centers. But there is still upside, despite being mature, there is still upside for them to increase the top line from there.
I mean, you can squeeze a bit more, but you cannot expect like the same amount
A
of
40%
upside.
jump or 50% jump, no, that will not be there. It will go
Hmm.
steadily at around, you can expect 12 to 15%. After this, it will be a combination of incremental revenue from the prices or the kind of test that we're doing and some additional number of patients that we're able to do. It will be a
All
combination
right,
of
all
that.
right. Okay. And this, the funds you had raised in pre-IPO, so for the acquisition you made, is it already active and reflecting in your business?
No, no, the acquisition is still to be made. We are in discussions with a few this, but nothing has been closed as yet.
Can you give more details? What is it about, like the location and the what kind of center or hub?
No, we are looking at hubs only. We are only looking to take centers which are into CT, MRI. We are not looking at smaller centers. We are looking at profitable centers which have existing profitability. And the basically, let me tell you the kind of acquisition that we're looking to do. With regards to Pratham, when we acquired Pratham, it was actually one of the oldest centers of Mira Bhayandar. It's got a huge brand in itself in the local vicinity. But the thing was that the radiologist was quite senior. He was, a senior citizen, and he did not want to be involved in the daily operations of the center. Plus, he was used to operating in a time where the market was lesser competitive, or he was the sole player. Now there is additional. I won't say it is hyper competitive, but there is more competitiveness which is there, and there's more networking that needs to be done with doctors. So he was finding it quite burdensome. So it is these kind of centers that you purchase and take over, wherein it is more that there is no one to follow the radiologist to manage the center, and they want to take a step back and or hang their boots, and we are coming in as the people who will be taking it over from them.
Okay. You mentioned Thane is at 80%, Baikal at 85, right? So, what is the revenue that Baikal is doing currently on an annual basis?
So Baikla is doing approximately, I'll just be specific this moment. So Baikala for la- March 25 had done a top line of 5 odd crores.
Okay, and that's a mature one, right? So, when can we expect the new centers to mature? Like, have you given the timeline? I'm sorry if I missed. It's a break even, and then
No,
to
so basically, we expect for any center that we put up, our payback period that we look at is 3.5 years. That is when we expect the entire capital which has been put in to come back to us, right?
which is 5 to 6
And
crores.
which is 5 to 6 crores, that's right.
Okay,
And the operational break even that we look at is within a period of 4 to 6 months.
okay, 4 to 6 months. Got it. And lastly, so I understand it's a pre-IPO call, and you can't really share numbers, projections for the future, but like any sort of directional guidance from your side when it comes to your operating margins and revenue growth, a vision or a
So,
aspiration for the company.
so very simply put, like I said, radiology is a high margin business. We expect with our existing centers, we do expect our similar margins to be maintained. Going forward also, there will be as the capacity utilization increases from the other centers which are not performing at peak at this point of time, we will see some upside coming from there. With regards to the newer centers which are coming, we will along the same lines as we have done in the past. That is our expectation.
Sorry, Mr. Srivastav, I think your uh, your line was
I'm
really
sorry, I think I
disturbed.
got disconnected.
If you could just
Sorry,
repeat
could
after
you?
what you said, like after capacity utilization increases, there will be further upside, right? And then I
So yeah, basically, the capacity utilization that we are there, there will be upside once we, with regards to turnovers, once we are getting the other centers also, my Maroon center also towards the mature level. And of course, the newer centers that we can bring in, we expect the same, what has happened in the past. So,
Okay, got it, sir. Thank you and all the best to you.
thank you.
Thank you. Our next question is a text question from Nishant Gupta. Nishant is from Minerva Capital Research Solutions, and he has 4 questions for us. At what valuation is the company listing its IPO?
It's 105 crores.
Nishant's second question is, what is the current capacity utilization and what is the peak potential from existing setup?
I think, Nishant, that query was answered in the previous discussion. If there is anything more specific you want to ask, I can address that. Otherwise, to remain the same. We are operating at overall, if you take it as an average, we are operating all centers put together at under 70% capacity utilization. Between 65 to 70 is what I would say, because even our two spokes, which are not that old, they also have they are also not operating at peak capacity utilization.
The next question is, what is the peak revenue potential from new centers funded by IPO proceeds?
I I can't give that projection per se, but you can study. I mean, if my history is to go by, we are expecting it to repeat for us. Right. I again address that we have reached a turnover where we have, by investing a total of 25 crores, with you know, our investment to sales being around 1.35, 1.4 times is what I'm thinking right now. So if I take last year as an example, we are doing approximately 1.2. If an annualized basis of this year, we are doing approximately 1.36, almost 1.4. All right. So that is how mature centers usually work. That is how it is seen what we have seen in the past. We expect to repeat the same.
His fourth question is a request to share MOAT versus other larger listed or unlisted diagnostic chains.
So while our first moat, which is there with unlisted diagnostic firms, I mean the chains which are there. And let me be very specific with my comparison with regards to listed players and everything. What I said right at the start is that we are a team where the radiologists who are there, they form the core, and what they have learned, what they have learned of the challenges from their works is what we are trying to implement over here. So, for example, when I mentioned these larger chains, they rely very heavily on teleradiology, right? But teleradiology comes with a issue that if a report is given and there is a disconnect between the referring physician and what the report has come in, they need to have a discussion because whatever has come in the report is not reflecting in the symptoms that they observe, right? So there needs to be a discussion on this. And with regards to the larger chains, which rely very heavily on teleradiology, this doesn't become possible. What we have been doing is that we have got a team of radiologists. Each and every of our center will have a radiologist who is based at the center. Even if they are not, there is a backup, and we've got Dr. Sanket who manages the entire piece of the teleradiology, wherein he is a backup. He's also there personally himself, as in for connecting with the physicians. All right. So we have got this done at multiple levels. So the confidence that doctors get when they send it to our centers is the fact that if there is any issue, we can discuss it. Unlike any other larger chain where they will have to, probably dial out in the evening for the doctor to be there because they're not available in the first half for any such discussion. So the quick turnaround time for the patient becomes critical. And the second part is, in fact, it is a servicing part. I do not know whether you would count it as a moat or not, but all our centers are got close to five-star ratings on Google because we make it a point that when a patient comes to the center, they are not in a happy place. It is not, diagnostic centers are not someone that someone goes, especially like ours, where it is being done for clinical purpose. It is not, they are worried, they are stressed out, and they have come to our place. We treat them with a lot of humanity, and you'll find this in all our reviews. While the quality, I will not harp over the quality because I'm sure everyone else also does, right? That is, I think, a basic thing that is given. It is how humanly we treat our patients that helps us develop our moat. And the final part is, moat is essential when you are there in a hyper competitive environment, right? To keep people out. At this point of time, we are actually going in areas where there is a supply gap. So uh, even if there is competition, at this point of time, it is serving everyone adequately. So we are staying away from hyper-competitive geographies, and it is something that we are relying on our own research to find the right place.
Thank you. Our next question is from Yashwanti K, an individual investor. As the industry is fragmented and unorganized player has major market share, how do you see consolidation?
Very simply put, uh, the smaller players, which are there, right, they will always face pressures of margin. So, for example, a guy like me will be always able to offer something better, means for my company because of my cost of the products the I'm acquiring is in much larger quantity. Second part is that with regards to the standalone centers, we are in a position to uh, make them a part of a bigger brand when we say that I'm trying to address the consolidation part, that if they're looking to join hands with us, if you're looking at acquisitions, they become part of a bigger brand. The buyout doesn't need to be 100%. It can be 95%, 75%, whatever the case, as we saw with Pratham. So they become part of a bigger brand. They become part, they get the benefit of that from the lower costs which are associated because our vendors which are there, we get better prices from them. And the final piece why there is going to be consolidation is because while we are going into geographies where there are lesser competition, in the minds of a customer, if everything else is being met, the doctor is available for discussion, the reports are good, right, the reports are timely, then they would go with a brand which is more recognizable. That is the last thing with regards to diagnostics, which comes into, I won't say it doesn't, I mean, I'll never say that the brand doesn't make a play. It does. But it is after all of these things are addressed. So over there, we will be better off compared to the smaller player if he's managed to address everything. But one of the biggest differential between us and the smaller guy would be the fact that the radiologist is going to fall ill. He's human. He's going to fall ill. He's going to take a vacation. He's going to take some time out with his family, right? At that point of time, there are no backups for his center. But us, because of the wide expanse we have and around the clock, we are servicing patients and the sheer number of radiologists who are reporting for us, we will never be suffering from that.
Thank you. Our next question is from Mayuresh Reddy, an individual investor. Are we planning expanding beyond MMR region?
Yes, the simple answer is yes. In fact, we have mentioned in our RHP that we are expanding to Akola. We are also expanding to Vasai Virar. My geography is a little weak, so I don't know whether that would be taken as a part of MMR or outside MMR, but it's not too far from Mumbai. I will definitely accept that. So at this point of time, we have our planned centers over there as given in the RHP. But we are even for acquisitions, we are looking outside Mumbai, MMR. We are looking at different cities. So yes, we are definitely looking at that outside.
Thank you. Participants, if you wish to ask questions, you may click on the Q&A tab on the panel and click on the raise hand button. As there are no further questions, I would now like to hand the conference over to Mr. Amit Pathak, Manager at Socradamus Capital Private Limited, for closing comments.
Thank you so much. So, in conclusion, Invicta Diagnostics Limited stands at an important inflection point in its growth journey. With a robust track record, strong revenue growth, and rising profitability, and a proven hub and spoke diagnostic model serving the MMR region and beyond, the company is well positioned to scale its operations and capture growing demand for quality pathology and radiology services. The IPO proceeds with a significant portion earmarked for capital expenditure for 5 new diagnostic centers, will support expansion plans and further strengthen capacity, while the remainder will be deployed for general corporate purposes and issue expenses, enabling operational flexibility and strategic growth. With experienced promoters and management, a diversified diagnostics portfolio spanning routine to advanced pathology and radiology tests, and a clear vision for growth, Invicta is poised to create long-term value for shareholders who join at this stage. We believe this public offering represents not only an opportunity to invest in a diagnostic firm, but to participate in the next phase of the growth of the company, committed to deliver quality healthcare services through scale, operational excellence, and strategic expansion. We thank prospective investors and stakeholders for considering Invicta Diagnostic Limited as part of their investment portfolio, and we look forward to building a healthier future together. Thank you so much.
Thank you. Ladies and gentlemen, on behalf of Invicta Diagnostic Limited, that concludes today's session. Thank you for your participation. You may now click on the exit meeting to disconnect.
Thank you.